Well, to discuss this some more, I'm joined by Ken Wattret, Chief Eurozone Market Economist for BNP Paribas. Thanks very much for speaking to us, Ken. So what are you focusing on ahead of the ECB press conference today?
Well, two things really. The first is the ECB's refinancing operations, and the second is their new projections and how they present them. To deal with the first one first, I think we've had a very clear hint from Mr. Weber, who's obviously very influential on the Governing Council, that they're keen to roll forward their commitment to fixed rate full allotment for all their refinancing operations until early next year. That's to avoid exacerbating any end-year volatility. And I think that's a sensible move. He did, though, at the same time say he was keen on a normalisation process, so that debate will restart at the beginning of next year if, as we expect this afternoon, we get a signal that that fixed rate full allotment procedure is in place for a while. The second issue, the projections, well, the ECB will inevitably be revising up its growth forecast for this year. Their forecast back in June was 1%. That looked a little low at the time, and since then we've had a very strong second quarter, confirmed in the release this morning again. So the ECB will probably revise that forecast up, I would think, by between 1/4 percentage point. The key issue is whether they sound much more optimistic. I feel they'll probably be quite cautious. They've talked about an uneven recovery, headwinds to growth from balance sheet readjustment and so on. So my guess would be the numbers go higher, but the message is still a relatively cautious one.
Exactly, because when we speak about the Eurozone, it's really not a monolithic situation, is it, Ken? You have Germany very much powering ahead of the southern peripheral nations. How does Trichet need to navigate policy? How does he deal with this situation?
Well, I guess the simple thing that he would say is we focus on the average, not the national developments. That's going to be pretty difficult because that dispersion is becoming more broad-based. You see the German economy doing well, signs of life in domestic demand for the first time in a while in Germany, not the same elsewhere. You also have different developments with regard to the labour markets, competitiveness and so on. So it's a balancing act. It's quite difficult. My own feeling is still that one-size-fits-all monetary policy probably means one-size-fits-nobody monetary policy, and that's a problem for the ECB. I think for the moment the message is underlying inflation pressures remain relatively contained. The recovery is moving on, but it remains relatively fragile, and in that context it's rates on hold for quite a while.
And are these imbalances then perhaps more of a concern than, say, debt, when we talk about the long-term health of the Eurozone economies?
Well, I think there are all kinds of concerns. I mean, if you look at the periphery, you'd say, look at the stress we still see in sovereign bond markets. We've seen spreads in some of those markets, Greece, Ireland, Portugal, widen back to their highs. The ECB's intervention through the SMP has started to dissipate over the last couple of months, so they're not intervening as yet to try and bring those spreads down. You have worries about the competitiveness of some countries, you know, the obvious candidates who've seen the boom years of the past decade now being replaced by the post-asset price bubble bursting correction. And then you have this, you know, this ongoing debate about the normalisation of policy, and that's maybe where the national differences become problematic, because we get the feel from recent commentary that the German representatives on the Governing Council are pushing harder for a normalisation, and again my feeling is that's inappropriate for the euro area as a whole, but they seem to be seizing the agenda, and they're probably looking at the recent data and feeling the euro area is going back to normal. I couldn't agree. I couldn't disagree more.
Very, very briefly, Ken, and yes, as you say, we're expecting emergency lending measures to banks to be extended into 2011. Is this a good idea? Will it help stabilise the markets, or could we see more volatility in the coming months?
Well, I think we'll see more volatility, but I think what the ECB is probably about to announce is absolutely the right thing. I just wish they'd make a commitment to do it for longer. I'm still concerned that there are too many people who want to go back to normal too quickly.
Ken Wattret, thanks so much. Thank you for joining us.